Roger Montgomery from the Montgomery Fund, thanks for joining us.
Pleasure to be here, Mark.
Ben Graham, you're a student of his in investing, has said that the biggest enemy is quite often the investor himself. So what do you see as the most common mistakes that investors make, particularly retail investors?
Well, there are many, and I expect we will make all the mistakes before we're done as well. But perhaps the most common one is one of temperament, and that is the inability to maintain one's position in the face of what appears to be evidence arguing against the position that you've taken. So you've done your analysis, you believe that it's an outstanding business with bright long-term prospects, it's good value, everything's stacking up, and yet some exogenous event in Syria or the United States or China causes the share price to drop. The big mistake that people make is that they sway from their fortitude and they take their cue from price. And so they see the price dropping, they immediately believe that the price is right, the market is right, and they're wrong. And that, I think, is the most common mistake. But there are many more.
So what would your recommendation to investors be to avoid making that common mistake, which we see all the time?
Write down precisely why it is that you bought that particular equity, for example. Why did you make that investment? And when you're questioning it, review the reasons why you bought it. Go back to the original reasons. If they remain true, they're no longer untrue, then the reality is that you should hold that position. Because over the long run, you can't control share price direction, but we know that share prices follow value. So if you buy a business whose value is increasing, then of course the price is going to go up and down in the short run, but in the long run it'll look after itself. You can't control that. It's going to happen if you've got your analysis right. So stick to it.
Roger, thanks for the insight. If you'd like to see more insights from Roger, just check our website.